Okay, what's going on, Tycoon? Super excited for today's video. We're going to be looking at ticker symbol BEEM, BEEM. That's beamglobal.com. All right. This one looks very, very good to me. Okay, if you see, it has a similar pattern to a lot of the stocks that I've been monitoring and giving you guys updates on. Okay, so from November of last year up to January of this year, this current year. All right, we'll look at how much it ran up. Over 300%, okay, over 350%. So if you think that Beam could have another rally this winter from November to January, and you think that there's a possibility it could repeat that pattern of running up over 350%, okay, in about 60 days, then I have some debit spreads I want to show you guys, okay? So right here, these are going to be our ranges, our target areas for our debit spreads. Okay, so if we look here, we have the call debit spreads that I like. Okay, is going to be the 55 to 60 spread. Okay, they don't even have 60 on here as a strike price, but so we'll go to February of next year. We'll hit buy vertical. Okay, and we're going to buy the 50 calls, sell the 55 calls. All right, and we'll change this to 1. And for every one of those we purchase, it would cost us $51.30. That's going to be our max loss. Okay. Max loss is our initial investment plus, the cost of commissions for these options trades. And the max profit is $450. Okay. So for every 50 bucks you put in, if Beam is over $55 by the end of February, you will get $450. Okay. Now, with that being said, we're not looking to hold this contract to expiration. What we're doing is we're setting up a high probability of success trade with also a super high profit window. Okay, so the max profit on this is like near 1,000%. So what I would say is if you buy these, you can probably easily, if we hit these targets 50 and 55 before February, you can probably get anywhere from 100 to 500% return on your investment. Okay. So that looks really good to me. Okay. The goal when setting up these debit spreads is to find a high profit, a high max profit, and set your target profit and like exit. Okay. So if there's a max profit of 450, my profit goal for this one is going to be 200. If I can get to 200, I'm going to close this trade and it's going to be a successful trade. And then I'll move on and I'll move on to something better with a new opportunity. Okay. So there's one spread right there. All right, that one's pretty aggressive. All right, if you want to go up to here, and that's more aggressive. Less aggressive one that has a higher probability of success, okay, would be the same month, February of next year. All right, and we are going to look at this window. We're going to look at the 40 to 50 window. All right, so we'll go here and we'll click on the 40, buy vertical, and then we'll change this from the 45 to the 50 because we want to buy the 40 calls and sell the 50 calls. Okay. So for every one of those you purchase, it would cost you $236, and you have a max profit of 765. All right, so that's around 300%, somewhere in there roughly, is going to be your max profit on this play. So if we come up and we do see the stock continue to recover, and we see it recover and come into this zone before February, you most likely will have 50 to 100% on your option contracts. Okay, so like I said, the goal is to figure out your max profit and what your profit goal is out of that max profit. Okay, if you open up 10 of these spreads, then you can say, hey, well, my max profit is going to be 700 bucks on this. I'm going to sell half of my contracts at $350, and then I'm going to leave the other half and see if they can run up higher and go and get that max profit of 700. Or if they start to pull back and recover, at least you sold half of your contracts for profit and you can get out, hopefully with some still profit. Or if it does turn red, then you can cut your losses and you still got to keep profits. All right.